Paul Carrazzo from Carrazzo Consulting is an advisor to some of the leaders in the game, and I caught up with him recently at Randwick. Paul, the issue of taxation in the breeding and racing industry, it's something we can't get away from, but I guess there are so many finite points that a lot of people aren't aware of.
Oh, absolutely. In terms of the consulting we do, Caroline, we get most questions in the area of business or hobby. That's the real crucial issue in this industry, and it governs whether or not you can claim your losses against your taxable income, or whether you can have access to GST. So it's a crucial issue, and there's so many factors to consider as well.
What got you involved? I guess obviously an accountancy background, but what made you become interested in advising people in the particularly the breeding industry, I guess?
Yeah, well, I've always, if anyone who knows me, they know I'm a breeding tragic. So I love the breeding industry and racing. And my family have been in it for a long time, and when I first started at Ernst & Young, they had a specialist division that I got involved in horse racing and tax, and it really pretty much all grew from there. And there was a dearth of knowledge of accountants who know about this industry, so that's a real incentive to specialise or to do a lot of work in this space.
Yeah, it's a very intriguing industry, isn't it? Because it's really different to a lot of industries where you buy something. There's the risk element, the luck element, I guess, in horse racing.
The romance element too.
Exactly. Well, you've put your money where your mouth is. You've had a horse with Pete Snowden in the past as well. So
yes,
and you advise some of his clients now. So it goes full circle, doesn't it?
It does very much so. Yeah. We've had a lucky relationship with Snowden Racing, that's for sure. But yeah, look. It is an industry where it's high risk, high stakes, but if you get it right, you can be immense. And you've got to make sure your tax is all in order when that happens.
If you're wanting to become a commercial breeder, things like, I didn't know this, you don't need to have 6 mares necessarily to be a commercial breeder.
So 6 mares is no longer the 6 quality mares is no longer the criteria. Of course, scale of mares is important, but it's not determinative. It's not the only thing. You've got to take into account all the other factors, such as proper record keeping, profit intention, having a business plan, using consultants, regularly selling, a prospect of profit. All those other things are going to be factored in as well. It's all part of it.
This is one of the differences, isn't it? What if one year your foals don't make money, or they come out with bent legs? You can't every year guarantee that the business is going to be profitable. Well,
that's a really topical question, because when the new ruling came out, it actually takes this into account now, the unforeseen events. So if the breeder does have bad luck and they don't generate enough foals to sell and they make a significant loss because of it, that will not be fatal to arguing a business. So thankfully, in the ATO have taken account of case law in this area. So that is not going to make you fall over in terms of that business or, a business status, that's for sure, thankfully. And
I guess, the issue of stock write-downs, again, it's probably different to, we know, your car depreciates or your big television depreciates in value, but how do stock write-downs work when you're dealing with live animals?
Stock write-downs, it really is about an incentive for people to come into the industry. It's giving them a big write-down on their stock, so that they're allowed to preserve their capital for when they actually do pay tax later on. That's what a typical tax shelter is. So it's an incentive to get people investing in our Australian industry, as the Kiwis did back in the middle 80s when they first brought them in. That was very much central to their thinking as well. So it's an incentive to enter the industry, and it also helps breeders get on their feet to be able to preserve capital in the early days by having these big write-offs available for stallions and mares.
So how do they actually work? So say you have a stallion and you bought a share in a stallion, or you own 10% of a stallion. Yep. How much is written down every year? What are the criteria?
Well, let's go back a step. Firstly, you have to be in business to be able to use them. You've got to meet the business criteria. Once you've met that criteria, the stallion you can write off up to 25% per annum. A particular stallion, you can go 20 if you want, but most people go 25%. And that also applies to stallion shares as well. So if you're buying a share in a stallion. And for brood mares, you can write them off till they get to $1 by the age of 12. There's a systematic write-off you can put in place so that they're $1 by the age of 12. And the older you buy them, the more the write-off there is. And the big thing for our industry, for older brood mares, if you buy a brood mare that's 12 years or over, you're in the business, you can fully write off that mare in the year that you buy it down to $1. So that's a massive incentive for people buying older mares.
And capital gains tax, you know, for breeders and owners, I guess, you know, for a hobbyist. Now, this is really interesting from my point of view. If your interest in the horse is less than $10,000, you're actually exempt from capital gains tax, so you don't have to pay it. Whereas, explain how it'll work. So if you have a horse that you've spent more than that on, you do have to pay capital gains tax.
That's right. If you're interested in the horse, and it's not the total value of the horse, but just your interest, if it costs you more than $10,000 to get into the horse, yes, that horse is potentially subject to capital gains tax if you sell it at a profit. This is for a hobbyist we're talking about. If you pay under $10,000 for your interest in that horse, no matter how much you receive for the horse, no capital gains tax.
And that includes a service fee. So if I paid a $2,000 or $3,000 service fee,
that's right. If you're a hobby breeder and you paid less than $10,000 for your service fee,
and if I get offered $200,000,
you race it, you get offered $200,000, you are also exempt from tax. So you look at the service fee when you bred when the hobby breeder breeds a horse. Yeah.
And I guess another thing that needs to be talked about is, you know, as I mentioned, racing and breeding is a very different sort of industry to most things. So the tax office themselves, I guess there are issues with not having enough people that really understand it within the ATO.
It's an enormous problem. And it's very hard to explain to clients when we have frustrations dealing with the tax office, because they think there's a minimum amount of knowledge there, and regrettably often there isn't a minimum amount of knowledge, and we have to explain a lot of things to them. And it can really, you know, become quite costly and time consuming. So we're always, in our office, trying to help the ATO educate them on our industry, because I think it'll help everyone in the long run.
That also helps, you know, as far as, you know, approaching you as well. If anyone has any questions about it, if they're in any discussion with the ATO, to actually come to an expert and get that help.
Well, we try and be the go-between, and we try and act as the facilitator, get a good, sensible dialogue going, because often there's a problem before we come in and troubleshoot.
Yeah,
for sure.